Welcome back. You're watching Business Today, and yes, we're going to speak into a very important conversation when it comes to vehicle imports, taxation, crude oil talks, all of it coming up soon. Okay, before that, we also want to bring you a preview as to what are the other areas that we're going to talk about, especially on the Treasury bills, the situation on that, and also reasons when it comes to consumer goods, F&B, the tea sector. We are bringing you statistics also on this particular segment because we see a lot of depreciation happening, and also the prediction when it comes to Sri Lanka and Japan. What's going to happen there? All coming up now. Joining us on the show today to discuss in detail on those areas, or the point where I'll be putting him on the hot seat. He's the Overseas Economic and Equity Services at Frontier Research and leads the macroeconomic presentations, catering to senior level management team, and plays an instrumental role in building strong business relationships with top and middle level management. I have with me Shiran Fernando, Senior Analyst and Product Head of Economic Research at Frontier Research. Good evening.
Good evening, Shiran.
So I'm going to put you on the hot seat. I'm going to ask you all the questions because you've been with us earlier. So as a continuation on the show, I'm going to start with this one. Sri Lanka has been having long-standing ties with Japan. And then we're talking here as to how it'll impact, especially when it comes to the vehicle industry. What do you see as in terms of science and technology? Where do you see us moving?
I think since January, there's been a sort of a reshift in what we've had as our diplomatic policy. We've been visiting a lot of nations, they've been coming here, and we've sort of been looking at this term as well called economic diplomacy. So there's a bit of that happening as well. But also we are a country that's moving forward, trying to develop and trying to stand out among other peers, Asian peers, and be competitive. So Japan is a country that I think historically we've had very good relations with them, and we've in the past also got loans from them. But if you look at the car market, I don't think high-level discussions between governments sort of facilitates that per se. I think it's very organically done. Entrepreneurs go there, and there's trade links already established. So I don't think there's going to be a pass-through impact directly from this. Yes, maybe it'll sort out the trade barriers for the vehicle market. But other than that, I think links are well established. When it comes to the other benefits that we can get, I think a lot of discussion right now is on monorail and infrastructure building. So that's where sort of it matters. And this infrastructure spending needs to come in. Whether it'll come in as the government-to-government loan or whether we're going to get private partnerships, private-public partnerships in it, that remains to be seen. But the infrastructure spending that will happen is something that will be good for the economy because that's a long-term investment, more than 3 years to about 10 years horizon. So all this will definitely boost Sri Lanka, and I think taking Japan, for example, we would be also strengthening relationships with other countries. So all this is positive in terms of attracting investment, but it also, in the near term, it sort of does not solve sort of the issues that we're currently facing in terms of rupee pressure, as well as other external issues that the economy is under.
One of the current topics that we'd like to touch upon is that Iran plans to increase on the crude oil production by 500,000 barrels per day, and within a week of lifting the sanctions. Now, what will be the global impact of this, and where do you see Sri Lanka? Do you see Sri Lanka being affected, or rather getting affected?
I'm no global commodity expert. From the very little I know and what I read about, a lot of it is anyway the oil market is oversupplied, and what that means is there is too much of oil being pumped out compared to what the demand is. So, and this is also in a backdrop where global demand is also falling. I mean, every other week or every month you hear people cutting down their forecast for global GDP growth, oil consumption growth. China's not doing too well. Asian economies are a bit fragile. So a lot of these issues are sort of diminishing demand side. So you're having demand issues which is falling, and you have an oversupply in the market. That's about 1.5 million barrels a day. And I think what Iran is trying to propose is about 500,000 more into the market. So that will sort of create more excess supply. That's one thing that's going on, and also it also depends on the dynamics that the OPEC does come into play, because a lot of the time some of these OPEC countries right now, the strategy is to maintain the prices at the current levels, or even reduce it a bit more, but trying to trying to get market share. So all this is if Iran does pump in this to the market, then there is more tendency for prices to remain at these levels or reduce. But then you can never know when demand will pick up. A lot of it depends on Middle East tension and political uncertainty. So that's the dynamics. But I don't think there will be much impact. The impact for Sri Lanka is that oil prices would remain at these levels or even fall. But I mean, it's an uncertain market.
Right.
Difficult to call.
Shiran, have a look at this visual. This is some of the statistics that we have got, and it shows the increase of consumer goods in F&B and also vehicle imports as well.
Yeah.
What are your reasons for it?
Sri Lanka, the economy is structured in such a way that we have periods where there is high interest rates, consumption is down, and we go through very subdued economic activity. Basically, there is less spending by consumers, less spending by businesses. But what we've had over the last few years is very low interest rates. So these interest rates have meant that people go out and make the decision to purchase or invest in a good. So, for example, fixed deposit that, for example, a few years ago you would have got around 10% is probably now about 6 or 6.5. So you make the choice, okay, let me go in for a car loan, because lending rates have also fallen. So they've made the consumption decision or an investment decision to purchase this good, which ends up being consumption. So that has resulted in a lot of the vehicle imports to come up. Also because of global oil prices falling. I mean, around June last year, global oil prices were around $110 a barrel. Now it's around 50, trading around that area. So that has sort of even put more money into the consumer, because you're spending half the amount that you were at the petrol station. So you're now able to spend on other consumer goods. You're able to buy a washing machine, other white goods. And also, I think the last two budgets especially has put a lot of money in the hands of consumers. So in that cycle sort of has spurred on this level of import growth that we're seeing.
And also, if we look at the next slide that we have, very specially on the textile garments, and also we have on tea exports and seafoods, there's been a huge decline that has been variably shown there.
I think global, as I mentioned a bit earlier, global demand for global GDP growth as well as global demand has been diminishing slightly. Therefore, that has sort of affected our exports, because we rely on this. We need economic activity to be healthy for our garments. Other reasons are that other countries, for example, I think the EU markets, it has sort of declined in value against the dollar. So that means when we receive our dollars, it probably might be less. That's one reason. US market is picking up, but there's no such growth we're seeing in overall headline numbers for garments. If you look at tea exports, I think one of the key reasons is that prices have declined, so there's a price drop. And then on the volume side as well, sort of the turmoil that you're seeing in the Middle East over the last year, as well as what's going on in Russia, sort of prevented exports growing. So that's seen an overall drop. Seafood exports, I think it's largely due to the problems we have with the EU in terms of the fishing ban that we have. But I think those things will sort of iron itself out. And exports should grow. But it's worrying because exports, for example, this August as well, I think it declined about 15% compared to last year. So the trend is not favorable, especially when we're importing a lot as well. So it doesn't help cushion whatever we are importing. So that's, I think, the negative trend.
Mm-hmm. And there is this, it is said that the plantation companies are thinking about revenue sharing models, and also this is in order to work the worker productivity as well. Your thoughts on this? Because the reason for the tea exports has declined by 14.3%, I believe.
Tea exports have been declining. I think a key reason for that is tea prices have also fallen. So it's a very tight thing for the sector as well. But a significant portion of the tea industry, the costs go to labor, I think, more than 60% if I'm not mistaken. So a lot of that has to do with that, and they typically have gone with an attendance type model where pay is based on the number of times you attend the plantation rather than anything based on productivity. So this model sort of probably has outlived its time, and given that we are competing against other countries like Kenya, which are also having better, more productive workers. For example, I think statistics that I read was that a plucker on a daily basis plucks about 18 kilos per day in Sri Lanka, whereas in India it's about 20 odd, and in Kenya it's about 38. So we're competing against more productive labor, and the tea market is also changing. There's various demands across the various segments, so we're sort of in the same market that we've been in for several years. So given the changes in demand and given that we're not also dynamically changing to the market in terms of our cost structures, it's sort of hurting it. So I think this idea that's being put out is more looking at productivity. Whether it will be fruitful, it remains to be seen, but it's definitely a step in the right direction to sort of quell the pressure that the industry is facing.
Did you ever get caught in the recent traffic?
Always.
Always?
Try to avoid it, but it's very irregular right now, because general times that you think there would not be traffic, there is. And the by lanes that you do check to generally avoid traffic are now full with traffic. So.
And then you see that there is a 96% increase in some vehicles, and also we see the imports in vehicles has drastically increased. This doesn't show like a cool solution being shown anywhere, and it looks like we're going and getting stuck more and more. Where do you see this heading into, the market especially?
I think vehicle imports, that has also been due to the low interest rates. People have gone out. Those who have one vehicle have gone out and get a second vehicle. Those who aspire, because we're a very aspirational country.
And we have a target that we also want to grow.
Yes. It? So, given that we've gone out and got it, and lending rates also being low, so therefore we've gone and we've gone and made this purchase decision. So that has sort of put out more vehicles to the road than what policymakers and what people would have expected. So that has resulted in, I think, that's the issue in terms of policy being very reactive, rather than foreseeing that, which a lot of because given the changing government and what's happened in the last 11 months, I think there's not been real thinking about it. For example, my commute back home through Timirigasa to Dehivala, they made it one way completely from Havelock area towards that way through Havelock.
That entire stretch.
That entire stretch. But on the bylanes still enter the main road. So you have uniflow traffic and bylanes which come in. So that sort of defeats the purpose, because you suddenly go straight and then you have to wait for these guys to come and put it in. So those kind of thinkings is still there. You still have these bylanes which sort of impact the main flow of traffic. So those things have to be planned out. I think in that way, a lot of the roads in Sri Lanka are not planned out. Carpooling probably is an option. A lot of people drive. It's the only driver. It's just the driver and the car. So that is the other options. I think there needs to be measures taken in. But given historically budgets, I think sort of look to increase taxes and sort of reduce it. But this year, for example, this has been excise duty on motor vehicles has been one of the highest revenue earners for the country. So that's something that the government also needs to look at, whether they will try to stop, reduce this, because you can raise taxes. That will sort of in the near term maybe increase revenue, but then people they're not going to buy it. So then you're going to get a volume drop, and then revenue as a whole will fall. So the government is aware of that. The Treasury is aware of that. So they'll try not to quell that bubble. So we'll still be able to see some level of vehicles on the road. But I think the level that's coming in probably is the peak. and from now on, I don't think it will be as high. So I think it needs policymakers to think about traffic, how traffic flows,
systems.
and also it requires more clarity in terms of explanations of if they're trying to do something new. And on the aspect of motorists, they should also understand, give it time, maybe to give it a week without giving it a few days, and then saying this doesn't work.
A lot of people don't have patience because it
Yes.
was just implemented just a week, and then
Yeah.
the new system, and not too many people were happy with it, and then we're back to the old system.
Maybe that system was not the ideal one.
Effective. Yeah.
Maybe it wasn't thought through as much, but you need to try these things to sort of sort it out, because this is a paradigm that's totally new to a lot of people.
Sri Lanka Parliament plans to raise the Treasury bill borrowing limit by 47% as the island seeks to bridge the higher budget deficit. This is the gap amid the slow pace in the revenue growth. What are the macro and economic thoughts that you have on this?
So this year, I think the government has been faced with higher expenditure, a lot of current expenditure which has gone up. That has not been matched by the same level of revenue. So there's been, I think, a greater or a widening of the budget gap, which is revenue minus expenditure. So to bridge that gap, generally you go out either domestically or go out to the market and finance it with foreign sources, loans or a dollar bond. But what we've been doing recently is, because the global markets have not been too favorable, it's been very difficult for them for the central bank and the government and the treasury to go out and get the money. So they've been borrowing domestically. When they've been borrowing domestically, I think there's been a limit on the treasury bills. That's the limit you mentioned, and then they increased it yesterday. They tried to do that in the early part of the year, but they couldn't. They failed. So because of that, there was a heavy reliance on bond auctions. So all this has sort of created a lot of pressure, especially in terms of rates. So last year, I think there was only 7 actual bond auctions in Sri Lanka, local government bond auctions. But this year there has been 4 times of that, 28 as of last month. So that has resulted in the government going from more bill auctions to bond auctions. Though bill auctions have continued, but the amounts have been less. But now that this has been reached, I think it probably could start accepting on T-bills more and sort of bridge the deficit, which from a projected 4.1 is now expected to be above 6%. So that's not too great.
Right. Shiran, we're going to say thank you for joining us on the show, for your valuable insights and opinions being shared. And we'd love to have you back to probably closer to the budget as well.